What if I told you that the US government just made Bitcoin a legitimate way to buy a house? That's right. Your crypto wealth can now help you qualify for a mortgage without selling it. Plus, Hong Kong is going all in on digital assets, and Coinbase is about to change the derivatives game forever. This is Alex from Moonward Capital, and today's Crypto Pulse is absolutely packed with game-changing developments you need to know about. Welcome to Crypto Pulse, your trusted flash update on everything happening in the crypto markets. If you're new here, we deliver high-impact, no-fluff analysis twice daily to keep you ahead of the crowd. Make sure you hit that subscribe button and notification bell so you never miss these critical updates. Let's start with a quick market snapshot. Bitcoin is holding strong above $106,000, down less than 1% in the last 24 hours. Ethereum is also showing resilience at $2,225, with similar modest pullback. The overall market remains in a greed phase, with a fear and greed index reading of 61. What's particularly interesting is the sector performance. DeFi protocols are up nearly 5%, with lending platforms surging almost 4%. This outperformance is no coincidence given today's massive regulatory developments. Here's the bombshell development everyone's talking about. The Federal Housing Finance Agency has directed Fannie Mae and Freddie Mac to recognize cryptocurrency as a valid collateral for mortgage applications without requiring conversion to USD first. This is absolutely revolutionary. For years, crypto holders have faced a painful choice: sell your assets and trigger tax events to buy real estate, or keep hodling but miss out on property ownership. Now you can use your Bitcoin, Ethereum, and other cryptocurrencies as qualifying assets while maintaining your position. The market is already responding, with lending protocols specifically seeing significant gains as investors anticipate new use cases connecting crypto wealth to traditional finance. Meanwhile, Hong Kong has unveiled its comprehensive Digital Asset Policy 2.0 framework with a clear stablecoin licensing regime starting August 2025 and expanded tokenization initiatives for real-world assets. This LEAP strategy, that's legal clarity, ecosystem expansion, application development, and people development, positions Hong Kong as potentially the most progressive major financial hub for crypto. While other jurisdictions continue with piecemeal approaches, Hong Kong is creating a comprehensive framework that embraces everything from stablecoins to tokenized bonds, commodities, and real estate. And completing this trifecta of massive developments, Coinbase has announced the July 21st launch of the first fully CFTC-regulated perpetual futures for Bitcoin and Ethereum. This is huge for U.S. traders who have been forced to use offshore platforms for 24/7 perpetual-style contracts. Coinbase's regulated alternative could significantly reshape trading volumes while providing greater security and compliance. From a technical perspective, Bitcoin continues to consolidate near the critical $106,000 level after recovering from last week's volatility. All key moving averages remain supportive, and the reduced exchange inflows signal diminishing sell pressure. But the real action is in the sector rotation. DeFi and lending protocols are capturing significant value as the market recognizes the importance of these institutional bridges. Aptos is another standout performer, up over 5% following its partnership with Jump Crypto to launch Shelby, a decentralized hot storage solution that could revolutionize Web3 infrastructure. What we're witnessing is much more than isolated developments. It's the convergence of institutional adoption, regulatory clarity, and technological innovation, creating the perfect environment for the next phase of crypto growth. The use of crypto assets for mortgage qualification fundamentally changes the relationship between digital and traditional finance. When government-backed mortgage giants recognize the legitimacy of your Bitcoin holdings, we've entered entirely new territory. This integration of crypto wealth into the traditional financial system could unlock billions in previously siloed capital, creating powerful network effects across both ecosystems. I'm curious, do you see the mortgage integration or Coinbase's regulated perpetuals as more significant for mainstream adoption? Let me know in the comments below. For traders, consider the strategic implications of these developments. Lending protocols that can build bridges between crypto collateral and traditional finance could see sustained growth. And with Coinbase's perpetual futures launching July 21st, we might see significant volume shifts from offshore exchanges to regulated alternatives. That's all for today's Crypto Pulse. If you found this update valuable, smash that like button and subscribe for our twice daily analysis. I'm Alex from Moonward Capital, helping you stay ahead of the crowd. See you in 12 hours for our next update.